Hey guys, it's Aman
And Christina
from Our Rich Journey. It is the end of April, and so welcome back to our stock portfolio update. This is a monthly series that we're doing where we take you into our investment portfolio and show you how we're investing during a bear market. And this month, we always like to answer a question that comes from our audience. And the question that has been coming up time and time again is our opinion on other investments outside of our portfolio. And we think this is a great question because, as you know, we are only investing in 3 index funds in this portfolio. But if you've seen our other portfolios, you know that we also invest in ETFs. And so we often invest in those ETFs to supplement the index funds because we think ETFs play a powerful role in developing your portfolio.
So in this video, we are going to share an update on our portfolio and how it's been performing, but we're also going to discuss ETFs. And specifically, we are going to share the top 3 sector ETFs that we've been looking at.
So before we share, if you're new to this series, we invested $5,000 into the stock market on March 25th. And we invested in 3 index funds. If you have not seen that video, go back and look at that video. We provide insight into why we picked these particular index funds. Now, every month after this, we are going to invest another $1,200 into the stock market. And every month moving forward, we are going to give you guys an update on the performance of these investments.
So let's first start our conversation about sector ETFs, and we're going to start that with a definition. So a sector ETF is an exchange-traded fund that invests in the stocks of companies in a specific sector of the economy, such as energy, financials, telecom, utilities, healthcare, consumer discretionary, or real estate. So you buy ETFs just like stocks, but since it's a fund, it holds many other stocks within it. So sector ETFs are typically considered broad classifications, but these broad classifications can be broken down even more into, for example, industry groups. And those industry groups can be broken down into industries. And then after that, they can be broken down even further into sub-industries. So in other words, sector ETFs can be very broad or they can be very, very narrow. So take, for example, a healthcare sector ETF. Now, a healthcare sector ETF will only invest in stocks of companies involved in providing medical or healthcare products, services, technology, or equipment. So the healthcare ETF might invest in companies like Pfizer, Bristol Myers Squibb, Johnson & Johnson, and the United Health Group. Or take an energy ETF, for example. That energy ETF will invest in companies that are engaged in various aspects of the energy business, such as oil, natural gas, and coal.
Now, we talk a lot about the total stock market, but if you've seen our previous videos and if you've taken our class, you know that we invest in sector ETFs. And there are several reasons why we invest in sector ETFs, and those include our risk tolerance, timeline, and our expected rate of return.
So keep these things in mind when you're thinking about picking an investment, especially sector ETFs, because with sector ETFs, the reward can be greater, but the risk can also be greater as well. So there's 3 reasons why we invest in ETFs and 3 reasons why you can consider investing in ETFs as well. So the first reason is you expect it to outperform the total stock market. The second reason is you think a particular sector is on sale now. And the third reason is you want to add safety or increase the risk or return in your overall portfolio. So for example, if you're looking to increase your safety with a particular sector ETF, you may focus on a utilities ETF. But if you're looking to be more aggressive, you may focus on a technology ETF.
Now, also keep in mind, the more niche the sector is, the greater the risk is with investing in sector ETFs. But then again, so is the reward. These are all things that you have to take into consideration when you're identifying your investment. So now that we've talked about why you may want to invest in sector ETFs, let's talk about the pros and cons of investing in them. And let's start out with the first pro, and it's you can take advantage of trends. If you are well versed in a particular industry and you're able to recognize a trend before it takes off, investing in sector ETFs may be a good choice for you.
Now, there is a con to this as well, because trends can be short-term or they can be long-term and sustainable. If you are focused on short-term trends, your investments may not do well in the long run. And our goal always with our investments is to have long-term returns. So focus on long-term investments and long-term trends. So the next pro is that sector ETFs can offer broad diversification. So instead of just investing in one company, for example, a sector ETF can invest in more than 100 different companies.
But the con is that the diversification is limited to that industry. So if that industry goes through a downturn, then it's almost like investing in an individual stock. So you have to be careful about investing in certain industries. And the next pro is that when you own a number of ETFs within your portfolio, you are able to rebalance more efficiently. You see, rebalancing is a very important part of investing. It allows you to reduce risk and optimize returns. And we talk a lot about this in more detail in our course. But when you have a number of ETFs within your portfolio and you have an asset allocation plan, you are able to rebalance between those ETFs.
So there is one con related to making your rebalancing too easy within your portfolio, and that is sometimes people will say they're rebalancing, but they're actually trying to time the market. So when you're rebalancing, you stick to an allocation and you stick to your investment plan. Market timing, on the other hand, is something very different. You're trying to jump in and out of the market when the market is high and when the market is low, and you're trying to time the market. We have said this many times before, but timing the market is not a successful investment strategy over the long term. So focus on rebalancing and not trying to time the market.
And now the last pro with sector ETFs is that there are a ton of choices to pick from. You can really develop a very specialized portfolio that is unique to your investment goals. But on the other hand, because there are so many options to pick from, it can be a little overwhelming once you start to dig deep into all of these different sectors. So it's very important that you do your research when you start to invest in sector ETFs.
So with that being said, we are going to share 3 different specific sector ETFs that we are interested in. And the first one is an information technology ETF, and it's VGT. Now this particular technology ETF is riskier because it's just technology, and that's generally riskier. But with the riskier investment, there is also the opportunity for greater returns. And so we really like this particular sector. If you also look at how things are behaving now in the economy with people at home more, people online more, we're interested to see how that type of behavior is going to impact this particular sector. And the next sector ETF that we're interested in is VPU. This is a utility sector ETF. Now, a utility sector ETF tends to be more balanced or more stable compared to a technology ETF, but we're also interested in this because this is one of the more basic requirements in terms of people's everyday needs. So people typically rely on these utilities regardless of how the economy is performing.
The next sector ETF that we're interested in is VDC. It's a consumer staples sector ETF. Consumer staples sector ETFs invest in companies that make personal care products, foods, or household goods that remain in strong demand regardless of what's going on in the environment.
So one of the reasons why we like VDC and why we're keeping our eye on this particular sector is because of the current situation in the economy right now. More people are spending time at home, which means that they're consuming more at home versus going out to, say, for example, restaurants, or consuming more outside of the home. So we're really taking an eye, or we're really keeping an eye on this particular sector.
So those are the 3 sectors that we're keeping an eye on. We think they are an interesting group. Now, we're not saying that you guys should go out and invest in these same sectors. We're saying this is how we go about identifying our investments before we make the investment. We earmark them and then we follow through with further research.
So now let's get into the performance of our portfolio. Now, last month on March 25th, we invested $5,000 into 3 different index funds. And then this month, we invested an additional $1,200 into these 3 different index funds. So let's go over the performance of these index funds and how they've been doing over the past month. The first stock is Fidelity Zero Total Market Index Fund, FZROX. On April 15th, we invested $720 and bought 74.844 shares at $9.62 each. We now own a total of 425.161 shares at an average price of $8.77 per share. Our total amount invested is $3,730.18. The current value as of April 27th is $4,255.86, making this a total gain of $525.68 or 14.09%. The next investment is Fidelity Zero International Index Fund, FZILX. On April 15th, we invested $240 and bought 29.340 shares at $8.18 each. We now own a total of 157.875 shares at an average price of $7.85 per share. Our total amount invested is $1,240. The current value as of April 27th is $1,324.57, making this a total gain of $84.57 or 6.82%. And our last investment is with Fidelity Real Estate Index Fund, FSRNX. On April 15th, we invested $240 and bought 18.853 shares at $12.73 each. We now own a total of 107.270 shares at an average price of $11.56 per share. Our total amount invested is $1,240. The current value as of April 27th is $1,367.69, making this a total gain of $127.69 or 10.30%. Overall, our portfolio as of April 27th is valued at $6,948.12, which is up $737.95 or 11.88%. So that is the performance of our portfolio this month. Like we said, each month we're going to be investing more into our portfolio and we're going to be opening up our portfolio to share with you the performance of that portfolio. And if you're interested in the meantime of learning more about investing, you can sign up for our stock market investing course and we'll leave a link in the description below. And of course, if you like this video, make sure you give us a thumbs up, subscribe to our channel, and join the journey.